Hey everybody, welcome into the Thinking Crypto podcast, your home for cryptocurrency news and interviews. I'm your host, Tony Edward. On your way in, please hit that subscribe button as well as the thumbs up button and leave a comment below. If you're listening on a podcast platform such as Spotify or Apple, please leave a 5-star rating and review. Folks, as many of you can see on the YouTube channel, I'm currently still on vacation with the family, recording from my hotel right now in one of the conference rooms. But folks, we got big confirmation from one of the Fed governors that they are returning to QE. Now, in yesterday's podcast, I gave you updates from Ray Dalio, who headed up the most successful hedge fund in the investing world. And he stated that the Fed is going to stimulate the economy and assets are going to pump, and that could lead us to a bubble. Well, look at the headline today from the Wall Street Journal. Fed's Williams expects central bank to return to asset purchases soon. Folks, they are going to go back to money printing. It's what we've been discussing since the beginning of 2023, where the Fed went into quantitative tightening in November into December 2021. 2022 was a massive bear market. We know what happened in that year, right? But then we started seeing the bottoming out of that market, and then the Fed slowly paused rate hikes. Then they started cutting rate hikes, and along the way, they did stealth QE, injecting liquidity, bailing out SVB and a bunch of the regional banks, right? So liquidity started making its way through the system. In addition, global liquidity started going up, and the US M2 also started going up. So asset prices are correlated to this, right? Crypto, stocks, real estate, precious metals, and much more. Now they are about to turn the money printer back on. So this is very bullish. Let me give you some of the details here. So New York Fed President John Williams said that the Federal Reserve could soon return to expanding its securities holdings a week after the central bank said that it would wind down efforts to shrink its balance sheet on December 1st. So we heard from Jerome Powell straight out the horse's mouth now that they are wrapping up quantitative tightening and that the deadline is December 1st. The net bond purchases would be the next long planned phase of the Fed's approach to matching the levels of cash-like assets available to banks to their needs, not a new effort to stimulate the economy. But it doesn't matter which path or avenue they inject liquidity or buy the securities. It doesn't matter. That liquidity will drive asset prices higher. So this is why I'm macro bullish, folks. As long as central banks keep doing things like this, it's not just the Fed. It's the China central bank. It's whatever central bank around the globe. As long as they keep printing money, I am bullish because assets will follow. So the short-term volatility is noise, in my opinion. Now, I know all of us are here to make money. We want to make returns. I understand that. I'm in the same boat, right? I am not a billionaire, so I'm here trying to make money, and I'm trying to help myself and my family and improve the financial situation. And I see crypto as the fastest horse in the asset race to make that money, right? Those great returns. So this is a major signal, folks. Don't miss how big this is. They are going to go back to money printing because the fiat system requires it. There's no way around this. Now, we are starting to see cracks in the system, and this is why we're seeing the change in the tone. We're ramping down quantitative tightening. We're going to go into purchasing securities again. It's because we are seeing massive layoffs around the United States for different industries. And look at this update for October. U.S. employers announced 150,000 plus job cuts in October, the highest since 2003. In addition, U.S. consumer sentiment falls to its second lowest level on record. Consumer sentiment is now below the 2008 low. Folks, the second lowest level on record. So the Fed, we know they have two mandates, and that is to make sure they keep inflation down and keep jobs in the economy, keep as much have as much employment as possible. That right? I'm paraphrasing, right? But those are essentially their two mandates. So those things are not going well right now, and we know the only way out is print. So asset prices go bananas when they do that. So this is why I believe this macro bull market will bleed into 2026. How far, I don't know, right? I don't have a crystal ball, but I'm going to go with the data. We'll keep monitoring. We're going to look for that top zone because Bitcoin itself has not been invalidated from a macro structure standpoint. we are still seeing some very bullish things. And here, Julian Battelle, who works with global macro investor Raoul Pal, shared a chart with the business cycle with Bitcoin's price and showing there's still room to run here. So this aligns with the thesis of the macro bull market and what the Fed is doing, returning to quantitative easing. So he says most people are overcomplicating the idea that Bitcoin's traditional 4-year cycle can extend. It's simple. If the business cycle extends, the crypto cycle extends. Bitcoin is a macro asset. So we've, of course, seen the correlation over the years, and we expect that correlation to continue. And here, Crypto Currently, great analyst, shared a chart showing the 3 possible scenarios that could play out for Bitcoin, saying there's a final push into the end of the year where Bitcoin goes to about 140K. And he's saying that's the possible scenario. The second scenario, he says, is likely is the full reset where Bitcoin goes and touches some lows, resets, taking a longer time to come out of the hole, but eventually does, and then runs to over 150K. And the third scenario, which he thinks is unlikely, is that it's over and we're entering into a bear market. So he said Bitcoin's base case remains unchanged, holding macro support level, sentiment reaching extreme fear, long-term investors capitulating left and right, liquidity set to increase soon. Zooming out creates clarity among all the short-term volatility and uncertainty. So I absolutely agree with this. I absolutely echo these statements because it's my analysis as well. It's my thesis. It's my research that is showing me the same setup here. Here, Crypto Wizard shared a great chart showing when you zoom out in this bull market for Bitcoin, we've just been setting higher highs and higher lows, and that's what Bitcoin is doing right now, setting a higher low. So he says, what if this isn't a breakdown? Bitcoin has pulled back to 100K as called. A deviation below is possible, but ultimately a bounce can form a higher low if it is sustained. The fight is on. So bulls and bears are battling, but guys, I think the macro structure is still intact here. Now, one other factor, we haven't seen Bitcoin dominance collapse like it has in the past. So that's one of my reasons for saying this bull market's not over. Analyst Matthew Hyland shared the Bitcoin dominance chart from the weekly standpoint, and it's currently rising, but it's setting up for a bearish rejection and to start collapsing. So he says the reason why you should have confidence in the altcoin price action is because the Bitcoin dominance chart looks bearish and has looked bearish for many weeks. The downtrend is favorable to continue. Therefore, this relief rally has been a dead cat bounce in a downtrend. So Bitcoin dominance at the cusp of getting rejected from a key resistance level and start breaking down. And that's very good for Bitcoin and altcoins. In addition, you have this macro factor of the U.S. government being shut down, which is a short-term headwind, in my opinion. But the U.S. Senate is set to vote on a bill to open the government. So hopefully they can get that done because it really sucks. A lot of people are out of jobs. We now have flights that are going to be canceled. It's a mess. So it's getting to a tipping point. If they don't get this right, people are going to get really angry, man. And I think we're setting up for this to open, the Fed doing QE and much more. So we got to be patient here and let these things play out. Now, folks, this episode is brought to you by Uphold, which is a great crypto platform I've been using since 2018. You can buy, sell, trade crypto assets on Uphold. They have 300 plus crypto assets. You can also stake your crypto on here. They provide staking rewards for 20 plus crypto assets. And folks, I've never had any issues with Uphold. They are reliable, they are safe, and best of all, they are fully reserved. They don't commingle or lend out your crypto assets. And they have a great rewards program where you can earn up to 5.25% on stablecoins, and you can get 24-hour early access to new tokens that they list. Now, the stablecoins they support includes Ripple's RLUSD, where you earn up to 5% there, USDC, that's issued by Circle, you earn up to 2% there, and USBC, you earn up to 5.25% there. And to participate, you simply have to log into the app once per month, deposit $50 once per month, and trade $50 once per month. So pretty simple. So check out Uphold, guys. Once again, I'm a user, have been for a long time. Link will be in the description. Now, folks, we continue to see big updates around XRP spot ETF filings, multiple updates. And here, 21 shares just dropped an 8A for their XRP spot ETF 20-day clock in effect, says Eric Balchunas, senior ETF analyst at Bloomberg. And next week, in fact, Canary Capital, also known as Canary Funds, they're going to be launching their XRP ETF. So they tweeted out saying coming soon. So it looks like November 13th is the date that they're aiming at. And folks, I'm going to be interviewing the co-founder and CEO of Canary Capital on Monday. So I'll bring you all the details there. His name is Stephen McClurg. So stay tuned for that interview. It's going to be a really good one. And then I should have my interview published with Ashish Burla, who's the CEO of Evernorth, which is the $1 billion XRP digital asset treasury company. So those interviews are going to be dropping next week, in addition to the interviews I did at Chainlink SmartCon. So stay tuned, folks. So big things are ahead. It looks like Bitwise also updated their spot Dogecoin ETF filings. So lots of big things lining up here, guys. And then, we got the market structure bill as another macro factor, these ETFs and much more. So again, I don't think the whales and the market makers are that dumb to let these major landmark moments and milestones pass the market, which would bring in tons of liquidity and flow, especially the market structure bill, which would give clarity, to just pass that up, an opportunity to bring in tons of capital, right? I honestly don't think they're that dumb. But look, there's nothing that is 100% guaranteed. We're talking probabilities here. So I think the higher probabilities on the bull side. Now, look at this news. Fed Governor Moran calls stablecoins a force to be reckoned with that could put downward pressure on interest rates. So we continue to see the endorsement of crypto blockchain stablecoins from governments, different government leaders, central banks, the banking industry, and much more. They're all capitulating. So stablecoins are an era of enormous growth, said Federal Reserve Governor Stephen Moran as he spoke about cryptocurrency for the first time in his new position. Based on the surveys that I've seen, the forecasts that I've seen, it's a force to be reckoned with, absolutely, Moran said on Friday when he was asked about crypto during a panel at the BCVC Summit in New York City. Moran seemed less sure of where the rest of crypto is headed, but said lots of innovation was happening either way. So it's no longer crypto's a fad, a scam. It's, the stigma of it's only used by criminals. Everybody is building with this technology now, which is incredible. All right, look at this. Kazakhstan may fuel $1 billion crypto reserve with gold, FX, and seized assets. So I think a lot of folks are starting to take the model of the United States and building their own crypto reserve, right? So expect to see more of this, game theories playing out here. So Kazakhstan's government is reportedly considering converting a portion of the country's national fund assets as well as part of its gold and foreign exchange reserves to fund a cryptocurrency reserve. Wow. How times have changed. This is incredible news. Look at this. Commonwear secures $25 million from Tempo as Stripe paradigm deepen blockchain bet. So crypto infrastructure startup Commonwear has raised $25 million in a funding round led by Tempo, a payments-focused blockchain network, underscoring a renewed effort to scale blockchain-based payment systems. The deal, first reported by Fortune on Friday, is notable because Tempo was launched in September by fintech giant Stripe and crypto venture firm Paradigm. Commonwear said other investors participated in the round but declined to name them. Commonwear develops open source software that allows other companies to build and deploy their own blockchains, supporting the growing ecosystem of payment-oriented Web3 infrastructure. Folks, we are seeing building on multiple fronts, from traditional finance companies, traditional payment companies, banks, and much more. It's fascinating. And now they're starting to make investments. So that should tell you where we are headed. It's going to be incredible when this technology is running throughout the economy, the markets, and the governments. And that's why I've been saying they will all run on blockchain rails. That is the end goal. Folks, that's the news. Let me know what you think. Leave your thoughts and comments below. Hit the thumbs up button. A great way to support the podcast is by subscribing to my free email newsletter. It is 100% free on Substack. Link will be in the description. Check out my book on Amazon and my course at mycryptocourse.com. This is a comprehensive course that teaches you everything you need to know about crypto. Folks, thank you so much for tuning in. I appreciate you all, and I'll talk to you all later.